Yo, 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 good morning. Happy Monday to everybody. February 1st, a new month is upon us. It's time to get to work. So, January was a good month. Number one goal for February is protecting the $30,000 of profit, or just about $30,000. So before we get jumping into what I'm going to be focusing on today, let me show y'all open positions. So got the put credit spreads in Amazon, INO, NEO, NVIDIA, PINS, and PLTR. And before the close on Friday, I sold a couple of call credit spreads on SPX as a potential hedge should the market want to get a little bit ugly here. So taking a look at the futures did open up a little bit ugly last night with the SPY and the Qs down a good 1%. However, things are bouncing here into the open. Of course, there's 2.5 hours before the open, so a lot could happen. But taking a look at the ES here, we are bouncing back above that 50 SMA. I think a really key level for the market to get to as far as, us being able to have confidence that we might not see any more downside in the short term is the 21 period EMA. So anytime that daily chart is dropping below the 21, especially when volatility is rising, there's just a growing probability there's going to be more downside if we can quickly kind of shake this off, dust ourselves off, and get back above the 21. The market has a pretty good chance of continuing that slow grind forward. Looking at the Qs, we came right down to the 50 period SMA last night, getting a good bounce here, and we're already trying to work our way back above the 21 EMA. So to me, that's a really key level. Index is closing below the 21. There's a potential for more downside. Index is getting back and holding above the 21. We might brush off this little sell-off pretty well. I'm still a firm believer that the most important chart in this market is going to be the daily chart here of the volatility index, the VIX. I don't think we're necessarily out of the woods, and I would warrant a little bit of patience before y'all go getting super aggressive buying the dip here until VIX reverts back to its mean. So we've seen this game before. VIX attempts to fire a daily squeeze. As it does, the market typically pulls back to the 21, but every time, when and only when VIX begins to go back towards its own 21, begins to die down, typically that's when the market reverses reverses trend, hooking back to the upside. So pay close attention here to VIX today. I don't think we're out of the woods just yet. I want to be a little bit patient. And of course, in the event this daily squeeze continues to fire to the upside, there should be some more downside for the market. So those are the two big focuses. Is VIX pulling back to the 21, and are the indexes holding above their 21? If not, I think there could be some more downside. Of course, it's a big week for earnings. We have got Amazon earnings this week. There is, I believe, Google earnings. You've got Pinterest, two of which I'm actually going to hold through earnings. So I do have the put credit spread in Amazon that expires in March with the short strike down here at 3,000. Loving this weekly squeeze. If y'all watch my January review video, Amazon has been really kind to me this year, and we're still holding a little bit of exposure. So heading into the week of earnings, I'm all the way out here at March 19th, which does give me plenty of time till expiration, and we got a short strike here at 3,000 and then bought the 29.80 for the put credit spread. So, of course, Amazon is a heavily weighted stock, one of the more important stocks in the market. I'm sure there could be a lot riding on that earnings announcement. For pins, we got the daily squeeze that we've been pursuing all of 2021 so far. Which has only been a month, but been pursuing the daily squeeze. This is just a good example of the benefit of the put credit spreads. We didn't catch anything as far as a directional move in pins, but for those of us trading the credit spreads, we are collecting a little bit of premium with the passage of time. So holding on to a little bit of pins into earnings, I do have a put credit spread in NEO with a short strike underneath the 50 period simple moving average. So let's check out NEO. And on NEO, we got plenty of time till expiration. March 5th expiration, short strike at 50. We bought the 45 as protection. For PLTR, we did take a couple $1,000 of profit off the table last week. Got one more put credit spread open. Beautiful daily squeeze. Quickly begins to move in our favor. So for PLTR, I am holding a March 19th expiration put credit spread with a short strike at 23, and then we bought the 21 as protection. So way down here at 23, I like our odds on PLTR, on INO. Got a put credit spread here as well, another beautiful daily squeeze, quickly working in our favor. So for INO, we have got February 19th put credit spread, short strike at 10, bought the 9 as protection, and then last but not least, NVIDIA. So NVIDIA been pursuing this weekly squeeze all year so far. Hasn't done anything right, hasn't done anything wrong. It's never lost a structure, never closed under the 21. So here I am, still holding on tight to NVIDIA. Now I do have one put credit spread that's going to expire this week with a short strike pretty deep out the money at 500. So any upside momentum in NVIDIA today should give us an opportunity to get rid of that credit spread for a good 70-80% of max profit. And I believe the max profit on that one is about $8,000. And then I do have another position for February 19th. A little bit of time on this puppy, on that puppy. And I got the short strike at 520 and then bought them 515s is protection. So I have got me Amazon, INO, NEO, NVIDIA, PINS, PLTR, and then the credit spread, call credit spread on the SPX as protection, as a hedge, just in case the yellow market here wants to get weird. So this expires this Friday, and I got the short strike up here at 3,100, above the 21 EMA, above the 8 EMA as well. So the whole goal, at least for me, is with a hedge, is that I'm looking for it not to work. So ideally, I lose money here on the hedge, and as a result, Amazon, NVIDIA, PLTR, PINS, NEO, etc. are bringing home the profits here. So just trying to be nice and balanced and buying myself a little bit of peace of mind by putting on that call credit spread right before the close on Friday. That way I do a little bit of profit coming in to cover some losses should we roll over today. So February 5th expiration call credit spread, sold the 3,800 call and then bought the 3,810 is protection. So I like how I'm positioned here. If the market explodes this week and all this was a dip back to the 50 and we just rip back to the highs from here, I think I'm pretty well positioned. Should be able to take advantage of that market momentum with the Amazons, NVIDIAs, etc. If the market does continue to chop around near the 50 or potentially go a little bit lower, we got some good profits coming in from those call credit spreads. So like where I'm sitting here, now it's going to be just a whole bunch of patience waiting to see where the market goes from here. All right, and if y'all aren't already, make sure you're following me on Twitter at Focused Options. So this morning, I asked a couple of y'all, you got any charts you want me to cover in the morning prep video? And if so, I got you. So let's get jumping into those requests here. All right, so one of the requests was for ServiceNow NOW. So what I do like about NOW is you have squeezes on my 3 favorite time frames. Weekly squeeze, you got yourself a 3-day squeeze, and we got a daily squeeze here as well. All of these squeezes have a bullish structure, meaning we're above the 21 EMA and we have our stack moving averages. So those are all positives here. Only observation is that the squeeze isn't the tightest as far as the daily chart goes. So when I'm looking for a squeeze, I want that nice tight consolidation. If we can try to find an example in the past, to me, this is the picture perfect setup. A nice tight squeeze, those Bollinger Bands are nice and narrow, holding the 21, stack moving averages, and you've got your light blue bars on the histogram, some bullish momentum working its way in. So a small little detail there, but not the tightest squeeze right now. So this strikes me as one that potentially could spend a few weeks chopping back and forth in a violent fashion before ultimately those Bollinger Bands really begin to squeeze. Then I think it's a picture perfect setup. So that's my only observation with NOW, not the tightest squeeze here on the daily chart, which could bring with it a little bit more back and forth until finally things do tighten up. All right, Broderick wanted to take a look at Lyft as well as CRON. So for Lyft, I would avoid this one for a long position until we can get back above the 21 EMA. Potentially, and of course things could bounce back here, but this daily chart is losing its bullish structure a little bit. We've lost our stack moving averages. We're no longer above the 21 EMA. And if you look at the histogram here, we have bearish momentum with the red bars. We're also breaking under the 50, so potentially, maybe we're looking at a daily squeeze here that could fire to the downside. So if I was looking for a long position on Lyft, I would hold off, sit on my hands for a little bit, and I would prefer to see several closes back above the 21 EMA and then ultimately some bullish momentum hitting your histogram. So in a nutshell, see if we can find an example here of old Lyft. Yeah, there's been a couple decent squeezes here, nothing too beautiful, but that's what I would wait for. Just a little bit of confirmation that it's a bullish trend, it's holding its structure, which it isn't right now. So I'd hold off a couple closes back above the 21, and then maybe you got something to work with there. And for CRON, I only like to focus on squeezes. So if it isn't squeezing on the weekly chart, the 3-day chart, or the daily chart, there's nothing for me to do here. So that's just a personal preference, me being the one-dimensional fellow that I am, but a little bit of a tough read. You are reverting back to the 21, so that's obviously your key level of support. What I would look for at this point is we use the reference of that 21 EMA potentially being the launching pad, with a lot of the best moves we're going to catch taking place off of the 21. So keep an eye on this, see if we dip back to the 21, and then see if that does hold up as a level of support, and you get some buyers coming in behind it. Otherwise, could be a bit sloppy here. So for FTNT, only observation here is that potentially you could be losing your bullish structure. So far inside this daily squeeze, the stock has done a good job of holding above the 21, but along with the overall market, did begin to break down a little bit on Friday. So if I was holding a position or looking to add a position here, that would be my primary focus. Can we get back above the 21? Can we begin to close back above that moving average? Otherwise, like any other stock in the market, you begin to close under the 21. It does open the door for some potential downside. So I keep my eyes on this one. Can we get back above the 21? If so, it's a good looking trend that might continue. If not, especially if the market continues to sell off a bit, there certainly could be a little bit more downside. So for Tesla, personally, I don't see any reason to rush right now. We closed under the 21 EMA there on Friday. I'd be a little bit patient. Can we get back above the 21? Can we string together a couple closes back above the moving average? And then I'm also going to be hunting for a lower time frame squeeze. The 21 EMA is our launching pad, and what's going to get that rocket, the stock, moving to the upside is energy getting released in the form of a squeeze. So as we're sitting right on top of the launching pad, I'll be looking for a 4-hour squeeze, which we don't have. We don't have a 2-hour here. Yeah, there's no 1-hour squeeze. So I think with Tesla, being a little bit patient is going to be important. Back above the 21 EMA, hey, as we know, this has been one of the strongest stocks in the market and could certainly continue. Dropping under the 21, there's the potential for more downside. So Tesla can be so rewarding when it has a good solid structure to it. I'd be patient here, and if we can get back above the 21, and then you can find a 4-hour, 2-hour, 1-hour, 30-minute squeeze, that could propel the stock back towards those highs. But I'll be a little bit patient for now, personally. So Home Depot's been a popular stock in the simpler options room, and for good reason. Beautiful daily squeeze that gave y'all the move you should be looking for. A push off the 21, you run a good 2 to 3 ATRs to the upside, you got to come back home. Now, this did break down a little bit there on Friday with the overall market, closing just at the 50-period simple moving average. And from a weekly perspective, this is one of the best looking weekly squeezes in the market. However, what I would be focusing on is, from Monday to Friday, can the weekly squeeze keep the structure here? Meaning, can we continue to close above the 21 EMA? A weekly close under the 21 doesn't always mean we're going to sell off even more, but there's just the potential. So as we're kind of waiting out the market here, waiting to see what VIX does the market bounce back? Do we continue to sell off here? We want to be really patient, and I think the major thing to focus on is, does the stock keep its structure or does it lose it? So with the daily chart pulling back to the 50, with the weekly chart closing right at that 21 EMA on Friday, if it can hold up from here, I'm a big fan of Home Depot. If we begin to drift under the weekly 21, there could be a little bit more downside and potentially coming down to test that support right around 260. All right, so for silver, now I understand why silver is, the topic of discussion here this morning and this week. Just to be completely honest with y'all, as it goes, with the Reddit and the Wall Street Bets thing, I just don't give a what. I want to focus on the same things I always want to focus on: a good, solid setup. Could really care less if a chat room is trying to take it over or pump it. If it's a good setup, there's something to work with. Silver does happen to be a good setup. Looking at the weekly chart, we have a beautiful weekly squeeze here, holding above the weekly 21 last week, stacked moving averages, and bullish momentum hitting the histogram. So beautiful weekly squeeze. From a daily chart perspective, be a little bit careful. I don't care who's pumping it. Stocks are going to move the same way they always move, and typically, once we're 2 ATRs above the 21 EMA, there's a growing probability you're going to dip back to the mean. So please do keep that in mind. Maybe Wall Street Bets comes in here today and they pump silver to the freaking moon, or maybe silver's going to move like every other stock, pushing 2 to 3 ATRs off its 21, running out of gas, and then ultimately pulling back to the downside. Now, if we take a look at the pre-market, I do know silver's popping this morning, so it's even more extended. So I understand why you're looking at it. I do love the weekly squeeze. My mindset is, ignore some of that outside noise, treat it like any other stock, go from there. So great looking weekly chart. The daily is a little bit extended. Things to take into consideration. And then for the two most popular stocks in this market, GME and AMC, I apologize, but I just got no opinion on either of these for y'all. This isn't my lane. I like to trade weekly, 3-day daily squeezes. I keep it at that. That's what works for me. This is not in that lane. So, there's no real opinion on these. The only thing I will say is be careful, y'all. like any other trade out there, and especially if you're, just starting to trade over the last few weeks and you stumble across my video, only risk what you can afford to lose. And not just on a trade like AMC or GameStop, but really any other trade. All pain in trading is self-inflicted. So this only turns into a disaster if you let it turn into a disaster. Of course, there is that potential risk in the air, like we saw last week of the platforms kind of shutting down the stock, not allowing you to get out, shit of that nature. So yeah, I wish I had more of an opinion for y'all on that, but personally, I'm going to stay in my lane. By no means does that mean there's no money to be made here. But that's it for this morning, y'all. I hope you guys have a good day of trading. Obviously, we'll be touching bases here all throughout the week. Keep you guys posted. Focus on VIX. Focus on that 21 EMA. Looking forward to the week ahead. Be safe, y'all. Talk to you soon.